Hello, my name is Steffen Munz. I'm the CFO, Group CFO of Schaltbau. Schaltbau is a story about waking up, sleeping beauty. In Schaltbau, the story is about having a stable core business, and the core business is in the rail sector, which is generally a very attractive industry. But more interesting about the Schaltbau story is us entering in attractive new markets of new energy, new industry, and e-mobility by transferring our core technologies into that new end markets. What you can see here is Schaltbau at a glance. So Schaltbau is, on the one hand side, the core business is the rail business, and Schaltbau is not a startup company. Schaltbau is, since more than 90 years, a well-established leading supplier of safety-critical rail components and systems in the rail infrastructure business, but also in the rolling stock business. We are one of the leading suppliers in that industry, and that industry generally is a very attractive industry, as it is an industry with long-term growth trends, an industry that has high barriers to entry, and the industry that also has kind of long growth trends. What is more exciting about the Schaltbau story is that we are in the process of transferring the core technologies and competencies from the rail sectors into new, more attractive, faster growing markets, such as new energy, new industry, and e-mobility. And we are doing that primarily by transferring our electromechanical components, but also our system and application know-how. Schaltbau is a mid-sized company, 500 million. We're having a 4% EBIT margin with a lot of upside potential. We're investing a lot in R&D. So it's not only that we're playing in attractive markets, but also we're focusing on R&D. We're spending approximately 7% of our revenue every year in R&D. And also, which is a part of our interesting story, that we have a nice, attractive aftermarket revenue pool. 12% of our revenue is in aftermarket in the service business. What you see on the bottom of that slide is, again, the red side is the rail business, the core business, which is at the moment representing 70% of the total revenue, and the new business represents 30%. And the plan going forward is exactly to shift that by growing faster, significantly faster in the blue sector, in the new markets, while growing modestly in the rail business, which is the core business. We are a global company while based in Germany. We are present in 60 companies worldwide. We have 14 production sites across the globe, with 4 major sites in Germany, and we're having a workforce of approximately 3,000 people across the globe. On the next slide, you see why we believe we are a very interesting investment opportunity for you. Again, in a nutshell, we are a leading supplier in the attractive rail industry with a lot of upside potential when it comes to performance. And we are in the process of transferring the key technologies, now our competencies, in faster growing end markets. And all these end markets are characterized by a battery powered application. First, we are operating in very attractive markets. On the one hand, the core business is the rail business. The rail business is an attractive market because it's a steady industry. There's a steady long-term growth trend, and we're talking about GDP plus growth rates. More exciting about the Schaltbau story is that we're entering new attractive growth markets in new energy, new industry, and e-mobility. All those markets having a clear double-digit growth rate, which is also sustainable. So in other words, a long-term growth trend. We are in a leading markets position. On the one hand side, in our core business, we are a leading supplier of safety-critical rail components and systems. So we are playing in 2 fields: in the infrastructure side, which is a very sticky industry, and we're one of the leading players. And that industry is also opening up from being a local industry into more a European and a global industry. And on the other hand, we're also a leading supplier into the rolling stock market. That industry is attractive because it also has not only attractive growth trends, but also high market entry barriers. That is due to the highly regulated nature of the industry, but also due to the slow changing environment that we are operating in. We're having a leading edge technology. So since more than 90 years, we are a leading player in safety critical components and systems. And we're exactly transferring the well-proven, established technologies that are basically DC. DC means direct current applications. Everywhere you have a battery operating, there's a DC environment, and everywhere where you have a DC environment, you need our safety products. That's exactly the story why we are well and optimistic to enter that new markets. We have a very resilient business model that is also has been proven during the COVID-19 pandemic last year due to our diversification from an industry perspective, but also from a geographical perspective and also from a customer diversification perspective. What is also interesting in our industry that we have a large installed base, especially in the rail sector. And we believe there's also a lot of upside and growth potential in that attractive aftermarket service. And our target is to increase that service revenue share from at the moment 12% to 20% of our total revenue. We have a solid financial profile with a lot of upside potential. The good news is we are back on the profitable growth path after a 3-year restructuring that has been completed in 2019. And we are back on the profitable growth path. We are targeting revenue growth rates of 8% over the next couple of years until 2026. And we shoot for even a higher, more aggressive upside potential in profitability, in capital returns, and finally in cash conversion. We are targeting a high single-digit EBIT margin. So we're targeting a doubling of the EBIT margin, and we're shooting for a mid-teen ROCE in the midterm. So this is exactly why we believe we're an interesting investment, because there's a lot of upside potential also from a financial performance. With me and with our CEO, there's a new management team in place, a senior management team with a strong track record, both from an industry perspective and also from a capital market perspective. We're committed to create value through implementing lean principles. And also we're very confident in the story, and therefore we're also co-invested in the story. So there is skin in the game of the management as well. Again, Schaltbau has 2 pillars. The first one is the core business, the rail business. And the second pillar is the new markets that I will present in a second. Rail sector is the core business. In the rail sector, we're playing in 2 fields, primarily in the rail infrastructure fields, what you see here, both on the component side, but also on the system sides. And on the other hand, we're playing in the rolling stock markets. So primarily entering entrance stores and systems, and also, which is a nice, attractive growth and also profit pool, is the attractive refurbishment and after-sales business. The rail sector itself is a very attractive industry because in all markets that we are playing, there are long-term growth trends that we are benefiting from. There's a clear need for environmental friendly and modern mass transportation that is ensuring a stable demand. And we are one of the leading component and system supplier ensuring safety and reliability in the markets, infrastructure, and rolling stock. A more interesting piece about the Schaltbau story is us entering with the proven technologies from the rail industry into new, attractive, or even more attractive growth markets, such as new industry, new energy, e-mobility, both on the automotive side and also charging stations. And what is the common theme? The common theme is our products can be used everywhere where is a battery in use. And there's a lot of many applications going forward where there will be a battery in use. And when there's a battery in use, normally you have a direct current environment. And exactly here, you need our components, electromechanical, but also our systems components to make sure that the energy is isolated and there is also a clear mechanism in place. So again, everywhere where battery is in use, and there will be more and more applications going forward, there is a DC direct current environment, and everywhere you need safety critical components that we are supplying. Going one step deeper into the new markets that we are in the process of entering. Again, we are benefiting from being a well-established player in DC, direct current rail components. That is a market that is stable, modestly growing by 2% per year. And what you see, the other markets, the new markets, having a growth profile of 12%, or in terms of e-mobility, more than 30% growth rates from 2020 to 2030. And all those new markets, either it's new energy, e-mobility, or charging station, are really driven by nice underlying growth trends. If it's the trend towards renewable energy or the trend towards decarbonization, or the trends in terms of zero carbon, which is a huge trend. And also what we are benefiting is the trend towards mass transportation or environmental safe mass transportation. So here, this is really the story, the future about the company and what you see. We expect that end markets will be driving the growth, the profitability in the future, and will represent a lion's share of the future composition of the company. On that slide, you see a couple end applications that we are serving in the new markets. So starting from the top here, first of all, we are addressing with our products the stationary charging markets. And the key application here is an e-bus. And you know, there's more and more e-buses, and e-buses are really making sure, and there will be clear regulations that no engine boosted buses are allowed to drive in the cities. So there's a clear trend that we're already seeing. And we're really supplying into that application, an e-bus, and we're providing them with fast charging solutions, mobile charging solutions, also deep charging solutions, overnight charging. Again, the even more attractive market, and you see here we're shooting for almost a 20% revenue share by 2026, is the e-mobility automotive market. When we talk about automotive, it's not only the passenger cars, it's also what we see even more attractive. It's what we call the commercial vehicles or utility vehicles, including e-trucks and also communal trucks here. And everywhere in that applications, it's the electrification is the key mega trend here. And when there's electrification, there's a battery in use. And when there's a battery in use, our products are making sure between the energy source and the battery that there's a clear mechanism that you can really separate or isolate the source from the battery in case that there's something happening. We believe the e-commercial trucks will pick up faster than the passenger cars because there's even a higher push also from inner cities, from the last mile, to really bring that kind of cars and trucks and vehicles out of the cities. Therefore, we already believe next year and the year after, there's a huge pickup, and we already see that in the order momentum. And we believe that the passenger cars, there will be between 2024 and 2025, where we really see that the new platforms where we are already designed in will pick up. What we're also addressing in terms of new energy and new industry are applications like material handling, so e-forks, for example. We're also supplying into battery test systems and also e-motor test system. But these are the applications that we are already supplying and will go so to supply. And all applications are really future trend applications. Everywhere is a battery in use. What you see here, we crafted the strategy 2023, which clearly outlining four strategic directions. Number one, and the most important initiatives that we are driving is we're shooting and targeting a sustainable, clear performance improvement. And there is really a huge upside potential for the company. And when we talk about financial performance, is all. It's about profitability, what we measure in EBIT margin. It's in terms of return on capital, we're measuring in ROCE, and also cash generation, which is basically free cash flow. And we have for all our business units clear, ambitious targets in place with full potential plans, and we're already executing the plans with a clear policy deployment mechanism that is a proven mechanism. We're also very disciplined in the areas where we are deploying the capital, and we're also linking the performance improvement, which is the key and most important topic for the new management, that we're clearly linking management incentives with performance improvements. Number two and number three is really clearly addressing the core business. So we also want to strengthen the core business, both in terms of the rail infrastructure and also in the rolling stock sector. And here we are targeting selective tuck-in acquisitions, where we clearly complement our product portfolio, but we're also kind of bring our products and our kind of setup in a more favorable cost position. So looking for acquisitions in low or best cost countries that bring us in that kind of favorable cost position. And which I think is the most exciting piece of the strategy is our kind of strategy to enter new attractive growth markets with new DC, direct current applications in new energy, in new industry, in e-mobility, and all these markets are characterized by a high growth profile. To enter those markets, we're already in the process of building a new factory that is meeting the automotive but also industry requirements. and a factory that is able to also produce on a mass scale. That is a highly efficient production site. And we're already integrating a couple of sites, including the headquarters, into the new factory. And as I already mentioned, we're seeing a lot of many fields of new applications where our products, systems, components are perfectly fitting in. And we're already transferring the well-established proven technologies into that new growth fields going forward. What you see here is our mid and long-term guidance that we are sharing with the capital markets. So at the moment, the company is a 500 million business at a 4% EBIT margin, with the lion's share of the revenue, approximately 70% is tied to the core business, and the core business is the rail business. What is our mission? Our mission is to transform the business from being a predominant rail business into a faster growing new business, and the new business is clearly the DC business. We're targeting 750 to 800 million revenue by 2026, and a clear high single-digit EBITDA margin and the mid-teen ROCE over the long term. So we're really shooting for doubling the EBIT margin. Therefore, improving the profitability of the business is most important for the company, and there is where the upside potential for the company is. Coming to the end, what are the key takeaways? Number one, Schaltbau is a leading supplier of safety critical components and systems in the rail sector. So the rail sector is the core business, was the core business, and will be the core business. The rail sector is a very attractive industry, characterized by resilient end markets, non-cyclical end markets, long-term growth trends, such as the trend towards mass transportation, decarbonization, and all those trends are favoring kind of our core business. And that industry is also attractive because of the very high entry barriers due to the regulatory requirements, but also to the slow changing environment. The more exciting piece of the Schaltbau story is us entering new, attractive, faster growing markets, new energy, new industry, e-mobility, with clear double-digit growth rates. And we're doing that by transferring our proven core technologies. And the core technologies are direct current-based and also backed by mega trends towards renewable energy, decarbonization, and e-mobility. We're very confident in terms of mid and long-term outlook. We believe we will outgrow the markets, and we will grow over the long term at a CAGR of 7 to 8%. With clearly focusing the company on improving the financial performance in terms of profitability, where we are targeting a high single-digit EBIT margin, in terms of capital returns measured in terms of ROCE, where we are shooting for a mid-teen ROCE target, and also clearly concentrating on cash conversion and cash generation. So also ESG is a very important topic for the company. Everything what we do is exactly we're playing in a sweet spot. The company is already focusing and will even focus more on ESG related topics. And we are also targeting a best-in-class ESG rating over the next couple of years. And this is also one of our targets that we're aiming for. There's a new management team in place with a strong track record, and also a management team that is committed to create value through implementing proven, established lean principles and a lean toolkit. And the management is strongly confident in the story, and therefore management is also co-invested, and therefore we have skin in the game because we truly believe in the story and we're confident in the story. Thank you for your attention.
Hi there. Since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.